Hi students, welcome to the video on management accounting funds flow statement. In the past video, we have defined what is funds flow statement, what are the other names of funds flow statement. For preparation of funds flow statement, first we have to prepare the adjusted profit and loss account. Then we prepare the statement of changes in working capital of business. Working capital, it is the excess of current assets over current liability. If there is increase in current asset, definitely there is increase in working capital. And if decrease in current asset, there is decrease in working capital. And reverse is the case for current liability. If there is increase in current liability, there is decrease in working capital. If decrease in current liability, there is increase in working capital. So from the source working capital, statement of changes in working capital, we can calculate whether there is decrease in working capital or increase in working capital. If there is decrease in working capital, then it is sources of funds, because sources means increase in current liabilities. So decrease in working capital means excess current liability. For example, we are getting, suppose the business is getting finance, short-term loan from the bank, maybe bank overdraft or CC, open cash credit. So in this case, the funds comes to the business, that is known as sources of funds. In case of increase in working capital means the current assets are more, that means we have invested the funds in the current asset, that is known as application of funds or uses of funds. So in the second video, first we will discuss what are the uses of fund flow statement. So it is having multifarious benefits or uses. First is analysis of changes in financial position of the company. So from the given 2 years balance sheet, we can know what happened to the assets or liability of a business. Then reasons for change in financial position. So suppose there is increase, then what is the reason? Suppose there is decrease in working capital, what is the reason? So we can determine from fund flow statement what are the reasons arises due to change in financial position. Then from this funds flow statement, we can prepare financial planning and budget also. Then we can know the level of working capital adequacy. That means whether working capital is sufficient to meet the short-term obligations of the business. Then it is helpful for comparative study. We can have a comparative study of the balance sheet on various dates with similar curve with different funds also. Then it is very helpful to have a loan from financial institution. In banks, fund flow statement, its analysis very important to ascertain the position of the financial position of any business concern or company. So in this video, we will solve one problem which is very important. Balance sheet of ABC Limited as on two dates given, 31st March 2022, 31st March 2023. So on liability side, share capital. So at the beginning, that 31st March 2022 means it is opening of 1st April 2022. At the beginning of the year it was 10 lakh, at the end it is 12 lakh. So there is increase in share capital to the extent of 2 lakhs. So increase means there is inflow of fund, that is sources. We have got 2 lakh out of issue of share capital. Then in profit and loss account, it is at the beginning it is 2,50,000. For that we have to prepare a profit and loss account. In the credit side we write buy balance brought down 2,50,000. On the debit side we write to balance carried down at the end 4,50,000. Then from that we will make the adjustment. Then finally we will arrive the net profit of net income which is a source for the business. If there is adjusted net profit is there, that is a source for the business. If there is adjusted net loss, that is application of the business. Then debenture. At the beginning it was 5 lakh, at the end it is 7 lakh 50,000. That means we have arranged, or company has raised the debenture to the extent of 2 lakh 50,000, which is known as sources of funds. Then creditor and bills payable. While calculating the statement of changes in working capital, we will consider current asset and current liability. Item wise we will show. If there is increase in any current asset, then there is increase in working capital. If there is decrease in current asset, there is decrease in working capital, and vice versa the case in case of current liability. Increase in current liability means there is decrease in working capital of the business. So here creditor was 1 lakh and at the end it is 1 lakh 50,000, there is 50,000 increase in the creditors. That means we have purchased 50,000 extra on credit. As a result, this 50,000 is known as the decrease in the working capital. Bills payable 10,000, at the end 20,000, so 10,000 increase. That means decrease in working capital to the extent of 10,000. Then here provision for depreciation is given separately. Generally, if from the various assets depreciation is deducted, that means net fixed assets are given. Here gross fixed assets are given, and as a provision for depreciation of building and machinery is given. So we have to calculate how much is the depreciation, how much the provision for depreciation, that will take to adjusted profit and loss account. In the asset side, goodwill is 1 lakh 50,000. So at the end it is 1 lakh 30,000. So goodwill, you know, it is reputation of any business concern. Here goodwill was 1 lakh 50,000. Now it is 1 lakh 30,000. Means every year we will write off the goodwill. Here we have written off the goodwill to the extent of 20,000. So it will be shown on the adjusted profit and loss account on the debit side to goodwill retain of 20,000. Building is asset. In the opening balance it was 5 lakh, closing 4 lakh 50,000. So we will open a building account. In the building account ledger, we will post on the debit side to balance brought down 5 lakh and by balance carried down 4 lakh 50,000. Similarly, machinery 10 lakh, at the end 12 lakh, we will open another machinery account. On the debit side, write to balance brought down 10 lakh. On the credit side, write by balance carried down 12 lakh. Then we will furniture was 10,000 at the beginning, at the end it is 20,000. That means purchase of furniture to the extent of 10,000. Purchase of furniture is application of funds or utilization of funds. Then investment, beginning 0 or nil, at the end it is 6 lakh. That means we have invested 6 lakh in the business. When we invested 6 lakh, that is we have invested 6 lakh outside the business. When we invested 6 lakh, that will be shown on the application of funds 6 lakhs. Then debtors 1 lakh 30,000. At the end it is 1 lakh 20,000. That is 10,000 decrease in debtor. Decrease in debtor means that is decrease in working capital. That means decrease in current asset means decrease in working capital. Similarly, stock 1 lakh 20,000. At the end it is 1 lakh 10,000. So there is decrease in stock to the extent of 10,000. That is decrease in working capital. In case of cash, opening was 20,000, closing 45,000. There is addition of 25,000 in cash. That means increase in current asset of cash. That is increasing working capital. And finally, preliminary expenses was 10,000 and at the end it is 5,000. That means during the year we have written off to the profit loss preliminary expenses to the extent of 5,000. So you know what is preliminary expenses before incorporation of business or before starting of the business. Whatever expenses we have incurred, that is known as preliminary expenses. And that preliminary expenses will be written off during the operation of the business. Suppose we have invested 1 lakh on preliminary expenses and it will be utilized for 10 years. Every year from profit and loss account we debit 10,000 till the end of 10 years, it will be nil. This is all about the balance sheet what we discussed. There is additional information. Without giving the adjusted profit and loss account, some additional information given that we have to take into consideration. A part of the building of the original cost was 50,000, which accumulated depreciation 5,000, sold during the year for 23,000. So 50,000 minus 5,000 is 45,000. We sold it for 60,000. So that is profit to the extent of 50,000. Second adjustment, one machine cost 1 lakh, on which accumulated depreciation was 3,000, was sold during the year for 2023 for 80,000. That means 1 lakh minus 3,000 it is. The book value was 97,000. We sold it for 80,000. That is loss of 70,000. And interim dividend paid during the year was 1,50,000. Dividend paid we also will adjust in the adjusted profit and loss account, and in the application of funds or usage of fund will write dividend paid 1,50,000. Our main purpose of preparing fund flow statement to know the sources of funds and application of fund. If both sides total will tally, then definitely solving the problem with 100% accuracy. So for this reason, now we will open the assets and provision. First we will do ledger. Then we will prepare adjusted profit and loss account. Here we will first open for building. So here we will open building account, and below that we will open provision for depreciation on building. Left hand side is debit side, right DL, credit side is CL. So DL, CL. Here this is asset. Building was 5 lakhs. So on the beginning of the year, that is 1st April 2022, write to balance brought down. The building was 5 lakh. At the end, we will show by balance carried down, that is closing figure, which is given in 2023, that is 4,50,000, that we have done. Then provision for depreciation of building, it is building 50,000, at the end it is 70,000, so it is liability, it is on credit side, so by balance brought down. The opening we have written, that is 50,000, here closing will write to balance carried down, that is 70,000. So that is depreciation to the, it is given a part of the building, original cost 50,000, on which accumulated depreciation was 5,000, sold for 60,000. So when we sold it for 60,000, write by bank account sales proceeds. Sales proceeds is how much? It is 60,000. Then depreciation is 5,000. When depreciation is 5,000, journal entry is depreciation account debited to building account. So building and credit side will write by depreciation on building, that is 5,000. On the sale, there is profit. That means 50,000 was the original cost, depreciation, accumulated depreciation deducted 5,000, so book value was 45,000. We sold it for 60,000, so that is profit to the extra 15,000 to write to adjusted profit and loss account. That we will take to adjusted profit and loss account. That is 15,000. Here the total is 5,15,000. Here also 5,15,000, so it is tallied. So we will prepare one adjusted profit and loss account. Adjusted profit and loss account. This is debit side, credit side. So it is given profit and loss at the beginning 2,50,000. In the liability side it is given. So write by balance brought down 2,50,000. So there is so many adjustments. So on the right, on the closing we'll write to balance carried down. The amount is 4,50,000. So one adjustment entry we have done. Building account debited to adjusted profit loss. That will write adjusted profit loss by building account. Profit on sale of building. That is profit on sale of building 15,000. And for depreciation also, first journal entry we did depreciation account debited to building account. Then that depreciation will close by transferring to provision adjusted profit and loss account. So that depreciation will be posted in provision for depreciation building. That means first amount we did depreciation account debited to building, then provision for depreciation building to building account. Here we will adjust building. That is 5,000. So it is 75,000. So by adjusted profit and loss account, it is 25,000. So that 25,000 will be posted on the debit side of adjusted profit to depreciation on building or provision for depreciation on building. This is 25,000 here. So this is over. So this building account and provision for depreciation building is now over. Then we will prepare machinery account and provision for depreciation on machinery. One machinery account we prepared. This is asset. So left hand side debit side, right hand side credit side. So we write opening balance to balance brought down. It is given 10 lakh. So we write 10 lakh. On the closing balance it is written 12 lakh. So write by balance carried down 12 lakhs. Carried down 12 lakh. Then another is provision for depreciation on machinery account. So it is given in the live side machinery opening 30,000. So we will write by balance brought down opening balance 30,000 and closing it is given 40,000 to balance carried down 40,000. Here machinery it is given one machine costing 1 lakh on which accumulated depreciation 3,000 means 97,000. So sold for 80,000. Right? Machinery by bank because journal entry is bank account debited to machinery account. So machinery by bank will write 80,000. Machinery by depreciation we write 3,000. Then there is loss because 97 minus 80 17,000 loss. That will write by adjusted profit and loss account. Loss account, that is loss on sale of machinery, it is 17,000. So debit side total is, credit side total is 12 lakh, 13 lakh. So opening was 10 lakh. So another 3 lakh is the balancing figure will write to purchase of machinery to bank account. That is known as balancing figure. The result is purchase of machinery. So we have purchased machinery to the extent of 3 lakh. So it is adjusted. So machinery, purchase of machinery 3 lakh we will consider in application of funds. Then depreciation account debited to machinery. Then depreciation closed by transferring to provision for depreciation. To depreciation. That is 3000. So it is 43,000. That will be adjusted from adjusted profit and loss account, adjusted profit and loss account. So depreciation on machinery is 13,000. That will post here. First we have posted depreciation of building, then we post to depreciation on machinery. That is 13,000. And we have to remember 3 lakh will write towards purchase of machinery. 3 lakh, that is application of funds. So 3 lakh is application of funds. 3 lakhs. Machinery purchase. Purchase of machinery. That we have to remember. Then we will here adjust the adjusted profit loss regarding goodwill 1,50,000, 30,000, 20,000 goodwill written off. So to goodwill written off. How much goodwill written off is here 20,000. Then preliminary expenditure of 5,000 to preliminary expenses written off 5,000. Then by building profit 15,000. There was a loss we have calculated here. How much? 97 minus 8, 17,000. That will write to furniture loss, to machinery. That is loss. Loss is 17,000. Then interim dividend will adjust here to interim dividend. Interim dividend, and we will show in the application. It is how much? 1,50,000. It is given in the adjustment 1,50,000. So we will total the debit side. So it is 0, 0, 0. Then 7, 5, 12, 3, 15, 5, 20, then 2, 7, 5, 12, 13, 15, 16, 18, then it is 6,80,000. So from 6,80,000 we write 2,50,000 plus 15, 2,65,000. 6,80,000 minus 2,65,000. That is by operation. Net operation, that is profit out of net operation, that is sources. Net operation from business. That is 4,15,000. 4,15,000. Now we have done adjusted profit loss. Then we will do statement of changes in working capital. Second, statement of changes in working capital. So first we write current assets. Under current asset, one is debtor. 2 years we will write we can write here आज on 31/3/22, आज on 31/3/23, then changes, increase or decrease, accordingly we can write. So we'll write debtor 1,30,000 a year, it is 1,20,000. So debtor decreases, means there is decrease in working capital to the extent of 10,000. Then stock, it was 1,20,000, at closing it is 1,10,000, so decrease is 10,000. Then cash beginning was 20,000 and it is at the end it is 45,000, that is increased to the extent of 25,000. Then this is current asset, then current liability we will write. This is creditor, beginning was 1 lakh, end was 1,50,000. So 50,000 increase in creditor means there is decrease in working capital to the extent of 50,000. Then bills payable, it is beginning was 10,000 and it is 20,000, this is increase, so decrease in. Here only in cash it is increase, in the cash it is increase 25,000. So net effect is decrease is heavier, decrease is 80,000. So the net effect is decrease in working capital. When there is decrease in working capital means current liability is more. So when current liability is more means sources of funds. We have raised loans, short-term loans from financial banks or financial institutions. This is, you will write 55,000. So total collect 80,000. So decrease in working capital 55,000. Decrease in working capital 55,000. So now we will prepare the fund flow statement. Fund flow statement of ABC Limited as on 31st March 2023. So left side is, that is sources of funds, this is amount, and right side application or uses of fund, this is amount. So we will write one by one. So we got funds net or funds from operation, that is by funds from operation. So funds from operation, that is sources. How much? It is 4,15,000. Then we sold the building for 60,000. Then sales proceeds of building. One sale of building, sales proceeds of building. It is 60,000. Then we sold the machinery for 80,000. Right? Sales proceeds of machinery. That is 80,000. Then write decrease in working capital is source. Will write decrease in working capital. It is 55,000. Then interim dividend is application. So write interim dividend. It is 1,50,000. Then purchase of machinery, we will write in this side, that is purchase of machinery. It is 3 lakhs. Then anything left? Building, machinery, furniture. Purchase of furniture 10,000. So this is what is left. Anything left? Yes. Share capital 2 lakh. It is raised. That is issue of share capital. Or issue of shares. How much? It is 2 lakhs. Then issue of debenture. It is 2,50,000. Issue of debentures 2,50,000. Here that is one investment 6 lakh. We write investment. That is application of fund. Funds goes out of us or goes out of business. So total comes to here 0, 0, 0, here 0, 6, 10,60,000. Here 0, 0, 0, here 10,50,000. Here also 10,60,000. Okay. So sources total is 10,60,000. Application total is 10,60,000. That means 100% accuracy in solving this problem. Thank you for watching this video. In the next video, we will prepare some most vital problems covering the all the. Suppose in the next video we will prepare one profit and loss account, then balance sheet for 2 years, then from that we will arrive the fund flow statement, that is sources and application.